We're back for another show of Real Talk with DP and Dev. We are live at the C&D Lounge. Thank you again for joining us. Subscribe to all of our channels. We are on YouTube. We are on Instagram. We are on TikTok. And we are also on Facebook. Again, this is Real Talk with DP and Dev. We are honored to be here again, and we are going to continue to drop free game to you with our special guests. This show is brought to you by Independent Capital Group. Independent Capital Group is a group of professionals there to help you with your investment needs. We are also there to help you with your credit monitoring as well. In terms of your investment needs, if you don't have the time to really invest in real estate, this is what Independent Capital Group is here for. Trained professionals who are there to help you gain 20% return on your investment. Again, that is 20% return on your investment. We are also there to help you with your credit monitoring, your credit scores, boost that up. For those who are trying to get homes, but their credit is kind of rocky, we are there to help you in terms of getting your credit where it needs to be.
Interest rate at an all-time low.
Interest rate at an all-time low. That's right, DP. So we are here to help you in all type of facets when it comes to financial wealth, financial prosperity, and financial freedom. For information, go to independentcapitalatl.com. Again, that is independentcapitalatl.com. Independent Capital Group, Black owned for Black people who want to make green money.
That's what's up.
DP.
What's up, Dad?
We back.
We back live.
Introduce our guest today.
Yeah, it's an honor. You know, so we got Mr. Curtis Campbell of Primerica. I think I've known 20 years now.
20 plus years.
20 plus years now. You know, so I used to be on Curtis' team. You know what I'm saying? Curtis was at TGI Fridays.
Okay.
Because after their meetings on, I think it's Thursday.
Thursday night, yeah.
You know, the whole team used to go over there to TGI Fridays.
Right.
And I was in there, you know, chilling, young and just doing my thing.
Yep.
So I had Curtis in there, and Curtis gave me a call and said, hey, you need to come check us out.
Right.
So I went through there, checked them out, you know, and I joined and became a part of this team because the opportunity was great. And it still is, you know what I'm saying? Because of what they're doing, everybody needs it, especially Black folks, you know what I'm saying? Because one thing that we weren't taught as a kid, most of us, you know, about money. You know what I'm saying? That's
right.
we don't get it in school. Most of us don't get it at home. So, you know, we got to go someplace or to someone who knows about money to teach us that.
Right.
And that's what they did, you know, as much as I had the capacity to learn at that time.
Right.
You know, when you're 25, you know, a lot of that stuff you don't really think about retirement because, you know, you assume you got years and years.
You got years and years, and before you know it, it comes. Yeah. Life happens fast, right?
Very fast. You know what I'm saying? So, and, you know, but I learned so much from Curtis. You know what I'm saying? He's such a good brother, you know what I'm saying? And even though I had some life circumstances, going through divorce and all that type of stuff, so I couldn't focus anymore on that business, you know, because it does take, because it's a sales process, you know what I'm saying? You got to be in it to make money. You know what I'm saying? If your mind isn't there, it won't work for you. But the opportunity was great. I did make some money while I was there. You know what I'm saying? Yeah. And the education I received was, you know, it was great. You can't put a dollar amount on it.
Yeah.
So I say that to say, you know, Curtis, you know, introduced me to the game, and he taught me, and I learned a lot from him. And me and my wife currently have our insurance with them right now. So,
awesome.
You know what I'm saying? So we don't only bring you people who are doing great things. We actually bring you people who we're doing business with.
Absolutely. So without further ado, the man, Curtis Campbell. What's up, brother?
Hey, what's happening? What's happening?
Did it divulge too much now?
Oh, no. You know, it was your birthday the night I met you. I do remember that. It was your birthday.
Probably was a good night. Hell of a night. So before we ask our questions, just to dive in, it's customary for the guests to go ahead and just do a toast before we start, man. So the floor is yours, man. Toast to whatever you want to.
Okay, here's to prosperity for the year 2021, health and prosperity for the rest of this year.
All right.
Yeah, that's what's
Salute.
up.
All right.
All right, man. So from what I understand, Curry, you've been in the game in terms of insurance for 20 plus, about 25 years.
Correct, yes.
You know, insurance is one of those things where it's not necessarily glamorous, right? But it is something that if you really continue to dig in and stay consistent with it, you can make it a lucrative business.
Right.
What is it that made you even get started in insurance to begin with?
Well, it really, you know, like Delonte said, it was the business opportunity that really I looked at and insurance just happened to be the product that the company was marketing.
Right.
But the business opportunity is what brought me to Primerica. And then once I learned about insurance, it's not like the typical insurance company. We take approach where we educate the consumer on insurance, how to buy insurance, what kinds of insurance to buy, and so forth. And we were up against the industry. Our company had a lot of turmoil more in terms of the industry did not like what we did.
Okay.
They didn't like the fact that we were educating clients on how to buy life insurance, and if they had the wrong kinds of life insurance, we exposed that. So, and I fell in love with it because everyone I knew at that time had the wrong type of life insurance or no insurance at all.
Right.
And I've been fortunate enough to pay over close to $5 million in death claims since I've been doing this. So
it's major. It's huge. But that's huge. It's huge. Yeah.
So, and I love it. It's a passion. So it's not just something, a career, it's a passion of mine.
Okay, that's awesome.
Let me actually explain to people. I know the story, but explain to people how you got into the business, because given your past, what you were doing before.
Okay, I used to be an Atlanta police officer. I'm a former military sergeant.
Thank you for serving.
Thank you. And it happened I've always wanted to be in business, first of all. I always wanted to be in business. And I'll never forget, the company was having a convention downtown Atlanta. And I was one of the police officers that was providing security there. And someone just gave me a card, just like I gave you one, and said, hey, you need to be in here with us. And, and I went and sat down and listened to the presentation. And I said to myself, if what they're telling me is true, this is what I'm going to be doing.
Okay.
Because I've always wanted to be in business, and it didn't take a lot of money to start a business through Primerica.
Right.
And then I saw that it was helping people, not only just an opportunity to make a lot of money, but an opportunity to actually help people, learn about money, how money works, and so forth.
That's dope. You got any other questions?
I got a lot of questions.
Come on, man. Go ahead. Do your thing. No?
So, the insurance game have changed since 20 years ago when I was involved with you guys, because back then you had to go to the table, get a wet signature on the application from a client and so forth. And now, everything is, I assume, digital because.
Yeah, because of COVID, we've had the platform of Zoom. So right. I haven't actually been in the house and did a policy or plan probably since last March.
Right.
And it's easier, people really don't like people coming to their houses anyway. And so it's easy to jump on a Zoom call or a conference call and conduct business right over Zoom.
Let me ask you this. Let's just dig right in, because when it comes to people, especially with insurance, we're not really educated on that, nor do we really have the foresight to really have insurance at the top of our attention.
It's not a priority for us.
It's definitely not a priority for us.
And it should be, but It's not, because insurance is one of the game changers when it comes to family wealth.
Yeah. So what is the mindset that you have to go into, like when you're, trying to, give insurance to our people?
And I'm glad you said that, because you're absolutely right. We have not been educated. I'm old enough to remember the insurance man knocking on the door, collecting insurance, and the policy. Someone died. It wasn't enough to put a headstone on a grave. And if you look at insurance, if you look at a house, okay, we're in this building here. The first thing in a house is the foundation.
Right.
Okay. Before you can build a house, you have to build the foundation. And if you look at your financial house, the first thing that goes into a financial house is the foundation, which is insurance.
Okay.
Now, I say that because insurance is instant. It would take a long time. Everyone would love to leave $1 million in savings and investments to their families and so forth if something happened. And it takes time to build that. But you can become worth $250,000, $500,000 in a matter of seconds. Okay. Because of insurance. So that's the foundation. It gives you that foundation. I always say you're able to buy wealth until you're able to accumulate wealth. And so if you die too soon, then you're able to leave wealth to your family. Or if you live too long, you have investments that's working for you in insurance where you can still leave wealth to your family.
You said live too long. How long is too long?
Too long is outliving your money. Okay,
what is? Can you break that down a little bit?
Well, basically, I always say you're gonna die too soon or you're gonna live too long, one or the other. You're gonna die before you're ready and before you saved a lot of money, or you're gonna live too long and outlive your money.
Now I know that's realistic, but it sounds very morbid.
Nobody wants to hear that.
Right.
No one wants to hear
it.
And one of the taboos about life insurance, because it associates with death. No one wants to talk about death.
Right.
And the insurance and life insurance is not for the dead, it's for the living.
Okay.
Because as an individual, I would never benefit from my life insurance.
Right.
But I have kids that are watching right now. They're going to benefit. The grandkids that I have in the future, the legacy is going to be where they can keep on and build a legacy because of life insurance. Delonte said something when we first started. If you go back and research all wealthy families, it started with one person. One person did the right things, put the right things in place, and it became generational wealth. Now, a lot of us don't have businesses, you guys are entrepreneurs and so forth, but we can still leave a financial legacy through insurance. Insurance is the cheapest, the most inexpensive form of insurance. It's life insurance.
Really?
But unfortunately, we don't have it.
Right.
And I say that because a lot of people will say, well, I have it on my job. And that's great because it's a benefit. But a benefit can easily be taken away from you. Okay. You change jobs or whatever. And insurance is based on age and health. The younger you are, the healthier you are, is the time where you should get a policy at home that is yours. I say every man needs at least $1 million worth of life insurance if you can afford it.
And why is that?
Because it's going to change your family tree. Okay. It will change your family tree. If you teach your beneficiaries what to do, businesses could be started. College education can be taken care of. Right. Debt can be eliminated. So many things can happen with $1 million worth of life insurance. And I know I said $1 million worth of life insurance, and people probably be like, well, that probably costs less than your car insurance. Right. And if we can insure a car for $150, $200 a month, our life is way more valuable.
I mean, if you look at that, when my dad died, if he had left $1 million for me, when you're a parent, if somebody left $1 million for you, look at the difference in the lifestyle. Absolutely. It would have been for us, our generation to come. Like you say, it only starts with one person doing the right thing.
That's it. And you look at Facebook and all the social media, something happens to an individual and you have the GoFundMe campaign. And that's just a travesty in our communities because, I promise you, if you research rich, wealthy people in their portfolios, you're going to find life insurance. I remember when Hillary was running for president and, she disclosed her financial statements. And in her portfolio, she and Bill had over $12 million worth of term life insurance. They're already rich. Why do they have life insurance? Because it's tax-free money. That's $12 million that their family is going to eventually get. Not if they die, when they die. Right. That's tax-free.
That's real rap right there.
And you said something earlier about life insurance is the cheapest insurance you can buy. Because you got a $20,000, $30,000 car, you might pay a couple $100 a month for full coverage. But you can pay a couple $100 a month and get $1 million worth of life insurance.
Depending on your age. Yeah, if you're in your early 30s or late $500,000,
I mean, that's
$500,000. Yeah. I mean, it's not gonna break you. It's money that we take and blow every single day. Right. If you got a child in their 20s, early 30s, for less than $1, for $1 a day, you can have a 6-figure policy on that child and not have to worry, because kids today is different than it was when we were growing up.
But do you think that some people think like, yeah, all those numbers, the millions and everything sounds good, but I'm not going to see that money. So why should I even why should I even get it?
And that's the attitude.
Do people ask that?
Believe me, I've heard husbands say, I'm not leaving my wife all that money. Okay. She can remarry. I'm not leaving my kids that money for them to blow. Right. Hey, what they do with it is on them. But I'm going to do the right things, you know? Yeah. And again, we have to change the mindset of the African-American households, because we're penalizing that next generation, because they don't have a hands up, if we don't make it, right? Right. And so you hear that, but it's just a mindset that we have to a poverty mindset is what I call it.
Yeah,
It's actually sad, you know what I'm saying? Because like you say, the living don't benefit from the life insurance. The life insurance for whoever is left here after you're gone,
right.
You know, and if your kids are going to be here, it should be something for them to have. I want my picture in the hallway of the house my son, you know what I'm saying, lives in, so you can tell the grandkids, "Oh, granddaddy did this for us."
Right, we're living this way because of granddad, and I guarantee you, a lot of people. I never knew my granddad. But if my granddad had left millions of dollars for our family, I guarantee you, I would have known who he was. His portrait would have been somewhere.
Yeah.
And so we have to break that chain somewhere down the road for our kids. You know, we may not have the opportunities to experience it. You know, when my father died, you know, wasn't life insurance in place or whatever. And you know, so I don't want to make the same mistakes for my kids. I don't have any grandkids yet, but I know hopefully I will one day. And I want it to be a legacy. I want my grandchild I don't have yet, my great grandchild, you know, to be able to say, oh, that's Papa Curtis there. He's the reason we have this ranch.
Right.
He's the reason we have these businesses and so forth. And for a life insurance policy to be able to make that difference, you can't put a price tag on it.
It's interesting you say that because, you know, biblically it talks about, you know, passing things down to your children and then your children's children.
A good man leaves an inheritance to his children.
You know, so it's written that that's what you're supposed to do. So in a sense, if you don't do that, you know, you're not really doing what you're basically not fulfilling one of your purposes as a provider.
True.
To your legacy.
True.
So I appreciate the fact that you're saying these things because they are gems that people do need to hear, and they need to kind of get past the fact that, you know, yeah, you may not see it, but it actually is not for you. You know, it's for the people after you, so they can be good.
Now, the other part of it, if you're a husband and wife or girlfriend and boyfriend or whatever, you father and she's the mother to the kid, and both of you getting paws on each other. If she go, you get the money also. You know what I'm saying? It's not a one-way street.
You're each other because no one knows who's going to go first. Yeah. I mean, it's just, you know, but you got to, most families right now are used to 2 incomes to make a household go. Right. And if you're a wife right now, have a husband, have kids, those 2 incomes make the mortgage, the cars, the insurance, all the things are happening. So if one of those incomes is taken away and there's no life insurance in place, now the house may have to go. Right. The car may have to go. You may have to get a part-time job, even though you have a small child now, because if that person, that spouse was bringing in $4,000 or $5,000 a month to that house and it's no longer coming in, that's a big hit, you know. And life insurance is, see, here's another thing. Until today still, and it's sad to say, there are companies that still sell burial insurance. Insurance is not to bury you. Right. It takes about $10,000 or less to bury a person. That's not the purpose of insurance. Insurance is to create an estate when you're gone. You know, and you can't have $10,000 to do that. You need hundreds and hundreds of thousands of dollars to be able to do that. Because what happens is, and I teach my clients this, let's say you had $500,000 worth of life insurance. Right. And a person passed away. Yep. Now, when we take that money to that spouse, whoever the beneficiary is, we're going to find out what are your immediate needs. What do you need to do now? You know, you have credit card debts, car payments or whatnot. And so let's say $150,000 that you need in your checking account. Mm-hmm. Well, that leaves $50 left. Yeah. Well, we want to take that $350 and put it into an investment. And if you use something called the rule of 72, and I'll definitely talk about that later. Yep. But if you average just a 12% return on that investment, in 6 years, that $350 would be $700,000. Mm-hmm. So you've doubled the amount. You have more than we actually gave you. Yeah. And so now that money keeps going. Another 6 years, that money is over $1 million. Right. Again, that's how you change the family tree for generations to come. You do the right things with the money. And people have done that.
Let me ask you a question because, again, this is Real Talk with DP and Dev. We're with Curtis Campbell, giving out free game and free gems in terms of insurance. And the beauty of this show is that it is interactive. So, we do have questions as we go through our show. And one of the questions that came up is, what is the level of insurance a single person should have with no kids or spouse?
This my cousin one. I think I'm the beneficiary. So you need to jack this number. You need to jack this number.
Well, even if you have no kids or a spouse, if you're young, insurance is going to cost you so little. It's good to get a policy because it's cheaper.
Okay.
And you have someone, if you don't have kids or a spouse, there's a niece, there's a mother, a parent, or aunt, someone is still going to have to bury you.
Okay.
And so it's someone you can still change somebody else's life. If you don't have kids, change your nephew, your niece, your aunt, makes their retirement can be solid because you made them a beneficiary. I can tell you stories. One story in particular, the youngest death claim I paid was a 23-year-old. And I'll never forget sitting there with the mother, and she didn't know why I was there. I'm showing her these claim papers we need. She said, "What is this?" I said, "Well, your son had a life insurance policy and you were the beneficiary." And he left his mother $250,000. And she sat there and started weeping and crying. I'm crying because she's crying. But, a 23-year-old, now he died of cancer. He didn't get killed in an accident. He died of cancer. But she didn't even know he had the policy.
He had the presence of mind to make sure things was in order.
Exactly.
Okay.
So you don't have to have a husband or wife or kids. You can still make an impact in someone's life by, getting an insurance policy. And it's going to cost you little or nothing. So you definitely want to do that.
So what would if you were to throw a number out there, what would the number be?
And it depends on, I would say if you're single, at least $50 a month, will get you $250,000.
What if you're
$500,000?
He on the older side, so
if you're older, of course, the older you are, it's going to cost a little bit more. But and each individual is different. There's no scale. Each individual is different. I'll definitely put my contact number up before I leave, and I'm more than happy to give you a quote.
Now, what about pre-existing conditions?
Okay, that's a good question because it depends on what the condition is.
What if it's high cholesterol?
No, that's not one.
All right, good.
No,
all right.
That's not one.
So diabetes?
Diabetes is not even one. Even if you're on insulin, it's depend on what your doctor's going to say, because we're going to require your medical records will be ordered.
Okay.
And it just depends, what other ailments do you have other than diabetes? I have clients that are on insulin, high blood pressure and so forth. Now, if you had a heart attack or heart surgery a year ago, of course, that plays into effect too. But
right.
But normally we it's hard not to get insured. I'll put it that way.
Okay.
It's hard not to get insured. You may pay a little bit more than a person that's healthy, but it's hard not to get insured.
So just so I'm clear, so the insurance that you're talking about right now is just life insurance, no other insurance like on your homes or your car or anything like that. All right.
Well, and I'll just say this: you want to be proper. When I say the foundation is insurance, that means if you do have a home, make sure you have the proper homeowners insurance. If you do have a car, make sure you have not just the minimums, but the best policy you can get. If you have a business, make sure you have business insurance because stuff happens.
Absolutely. Absolutely.
And if you're not insured, it's a devastation. It's a devastation.
And you were talking about the 23-year-old, but my partner, Sparty, he just passed a week and a half ago. And from what me and him have talked about, he had insurance. I don't know how much he had, but at 45, you dying in a car accident that's sudden. You almost got to have something to make sure. And you have 2 little kids, so you got to make sure there's something there.
Both under 10, right?
Yeah.
Well, Spartacus was my personal attorney, so I knew him and my friend. So it definitely hit home. And I've had the conversation with him more than one time about insurance. As a matter of fact, Spartacus took out a policy on his niece about 3 or 4 months ago.
Right.
And so we've had this conversation. I know what he had in place and so forth. So he did have his house in order.
Yeah.
And so, because we don't know that date, we don't know that time.
Right.
And so, again, because I say it's pennies on a dollar, man. And if you're a business owner, there's a policy called Key Man Insurance, where you can insure the important people of the key people of the business. So if a death happens, the business doesn't take a lick because you insured that portion of the business, plus it's a tax write-off. So it's so many things out there available, for people.
How many key man policies can you have?
As many as if it's 10 employees or 10 business partners.
If you got different businesses.
Yeah, if you
have one on each one of your businesses.
Okay.
Doesn't matter.
So me and Dev need to.
We need to holler at you.
Yeah.
Exactly.
All right. So here's the other big question that people usually get hung up on. Cause and it's always like that. What is the difference in whole and term insurance, and which one should you and should you not have?
Well, he's gonna be biased. You know what I'm saying?
I'm really not gonna be biased because when I have this conversation with clients, I always tell them, of course, the company I represent, 100% term insurance. But I always tell people, do your due diligence, do your research. If you go on YouTube Susie Arman, Dave Ramsey, Clark Howard,
right,
and just put in the word insurance and see what these experts have to say about purchasing life insurance, you will see that each and every one of them says term insurance is what you need. Now, they're not just saying that just because it sounds good. They're saying it for a reason.
Okay.
Reason being, life insurance is strictly for your life. If something happens to you, if you die, if insurance as you possibly can. When you purchase insurance, you want to buy as much as you can for as little as you can.
Right.
Term insurance is the cheapest form of life insurance. So it allows you to be able to get a lot for a little amount of money. Now, whole life insurance, and that's what most life insurance agents push. You can get a little life insurance, but pay a whole lot of money for it. And so, for an example, if you had a whole life policy and you had a $50,000 policy, you may be spending $150 a month for that policy. That same $150,000 a month can get you $350,000.
Okay.
Now ask yourself, which would you rather leave to your family, $50,000 or $150,000? I mean, $50,000 or $350,000.
$350,000.
Most people will say that.
Yeah.
And if you had the choice of choosing, you would pick that. But what happens is a lot of people, when they're presented with insurance, is only showing one type, and that's whole life insurance.
Okay.
And people say, well, I can borrow from my life insurance.
Yeah.
I mean, we've been hearing that term. Okay, but what are you borrowing? You're borrowing your own money. You're not borrowing their money. You're borrowing your money.
Right.
If you had a savings account at, let's just say XYZ Bank, and you went to the bank and you wanted to get $1,000 out of your account.
Yep.
You expect to just be able to go sign a slip and get your $1,000. But what if they gave you a form and say, I know this is your money, but you're going to have to borrow it. Not only are you going to have to borrow it, we're going to charge you 6 to 8% interest rate on it,
right.
Which means when you take it out, you got to put it back in. Not if you want to.
You're going to have to.
You're going to have to, even though that's my money. That's what whole life insurance is. It's a forced savings vehicle. Now, you may say, well, that sounds good. At least you got something you can borrow. Well, let's say you had a $100,000 policy and you had $20,000 worth of cash value built in your policy.
Yep.
And something happens. You probably think your family is going to get $120,000. I got $20,000 in my savings. I got $100,000 life insurance. No, they're still getting the $100,000. The company is now on the hook for $80,000 because they're going to take your 20 to make up the 100.
Okay.
So it's a flawless concept. Whereas if you had insurance, term insurance, and you had a mutual fund, an IRA, if something happens to you, your family got your life insurance and they got your investment because they're separate vehicles. When you want to get money out of your IRA, you don't have to borrow it. You just go withdraw your money.
Right. Straight like that.
And it's called cash surrender value.
Okay.
That word surrender, you got to look for.
It's never a good thing.
So that means surrender means, yeah, I can get my $20,000 out, but I got to surrender my $100,000 worth of life insurance. So it's a flawless. And if it was sold that way, people wouldn't buy it.
Right. Wow.
And I love educating. I love it when they already have whole life, because all I got to do is say, get your policy. And I'm not just telling you this. What does this mean?
Right.
Read this for yourself.
Right.
Borrow 6 to 8% to borrow my own money. And they can take up to 6 months to get it to you. Unless you're borrowing it to pay them.
That's pretty amazing.
let me ask you this. Because you guys have this rider called Return of Premium Rider, right?
No, we don't. There's a policy out there called Return of Premium. It's flawless as well.
Really?
No, it sounds good.
Yeah, it sounds like you paying all this.
I pay this money for 30 years and I don't die, you're going to give me my premium back.
Yeah.
But for 30 years, you've overpaid.
Oh, so
all it is, you've overpaid for 30 years. Whereas if you just had a regular policy for 30 years, took the difference and put it into a savings and investment.
So basically you're paying insurance on insurance.
10 times. You're right. You're paying insurance on insurance. I know it sounds good.
Yeah, it does sound.
See, ask yourself this question. What other insurance has a mechanism or a vehicle attached to it where you can borrow it? Can you borrow from your health insurance? Do they give you a return? Car insurance? No. Dental insurance? Only life insurance.
They only showing they want to pay for what you need.
So it's a flawless concept, but the unfortunate thing, so many families are left devastated because they never get that information.
Wow.
So many families are left devastated.
Real Talk with DP and Dev. Thank you again for joining in. Again, this is interactive, so we're going to ask a couple of questions. All right, Kurt, so we got another question. If you live past your term life insurance policy, what would the next step for you be?
Well, if you live past the term, number one, you've been blessed because you didn't die, but you just decide at that point, let's say you had a 30-year policy and 30 years from now, you're still living, the policy is getting ready to expire.
Okay.
It doesn't expire. You just decide now, okay, I had 300,000, I had a $500,000. Do I still need that amount 30 years from now? Because now it's going to be based on what are my responsibilities? Are my kids grown now? My house is paid for now. What do I need? But now at the same time, I've had 30 years to let my investment account grow. See, we want you to be self-insured. When it's called buy term and invest the difference, you would rather have a $300,000 IRA versus a $300,000 insurance policy when you reach 65. Because now you need that money to pay bills with.
Absolutely.
Okay. So, but the thing about, and that's one of the things that a lot of whole life agents tell people to keep them from buying term is that when that term runs out, you're out of insurance. You're just renting your insurance. No, it's not. Now you should decide, well, you know what? I need it for 10 more years.
Right.
But now I only need 150,000 because I got $500,000 cash. And so your responsibilities have decreased over that 30-year period.
And the term that you said, just so I'm clear, is buy term, invest the difference.
Right.
All right. Got it.
Buy term insurance, which is cheap. Take the difference that you're saving. Okay.
The difference of what you would have paid if you
what you would have paid if you were buying a whole life or
okay.
a universal life.
Yep.
And invest it in a good mutual fund. And you look at the history over the last 50 years, stocks have averaged over 12% return.
Right.
You know, you can't get that in an insurance policy is going to pay you 1 to 4%. 1 to 4. If you were getting a 1% return on your investments right now, it would take 72 years. 72 years for $1 to turn into $2.
Wow.
So if you want to figure that out, whatever you're doing, we'll talk about investing now. Just look at the interest rate you're getting.
Yeah.
Divide that number to 72.
Yeah.
Whatever answer you get.
This is the rule of 72.
The rule of 72.
Okay.
Whatever answer you get. If you have a 401k plan, call your company and see what was my average rate of return last year. Divide that number into 72. Whatever answer you get, that's how many years your money would double without you having to do anything.
Right.
And so the key thing is you got to be getting the right rate of return so that when you do reach retirement age, 20 years from now, 30 years from now, if you were averaging a double-digit return all that time, your small amount of money has turned into a big pot of money when you retire.
Let me ask you this, Kurt, because you know you got seniors that may have not save what they should have saved, and now they're in the non-working phase of their life, or they're working but they're not making as much money as they were making when they were in the prime of their life. And now they may want some insurance. And you see on the commercials during the day, because there's some seniors home, the guaranteed life stuff that's really expensive. You know what I'm saying? What do you tell seniors who they didn't save the $500,000? You know what I'm saying? But they still want to leave something for their kids or their grandkids or something like that.
I just had a client a couple of months ago that I had the same conversation with, because life insurance is going to cost them a pretty penny. And I said, for the little amount of insurance that you're going to get, which at that policy was $10,000, I said, I would rather you take that $150, $200 a month and put it into a aggressive mutual fund. Do that every year. I said, eventually you're going to surpass that $10,000 face amount of the policy. And then that money has a chance to just keep going and going and going. And so if you're at that point now where insurance is going to cost you way more, and it still depends too. If you still have a house that you haven't paid for or whatever, you may just have to bite that bullet and get the insurance. And so unfortunately, there are a lot of seniors in that position. And I will tell them the stuff on TV is not what you see. It sounds good.
Can you dive into that a little bit?
They had with Alex Trebek and the guy
all of that
from Law and
stuff
Order.
It's really, it should be criminal what they do, because those policies, they tell you guaranteed, no one turn down and all this kind of stuff. But what they don't tell you is if a person dies within the first 2 years of that policy, it's voided. The policy doesn't pay. You have to have it for at least 2 years for it even to pay out. And then there are stipulations in those policies, how you die and all that kind of stuff. And so it's really criminal. And the reverse mortgages, all that stuff that, they take advantage of these seniors. It's heartbreaking.
Is the reverse mortgage just a sophisticated insurance policy? Is that what it is?
It is, and it isn't. It's a way that, if you look at that commercial and they tell you you start paying when you want to or when you leave your home. When am I going to leave my home?
When you're dead. Okay,
so you're telling me now you're going to take my home.
Right.
It's what you're telling me. Because they say it, but a lot of people miss that. The next time you see that commercial, listen at the end. You make the payments when you want to, or you can just wait until you leave your home.
Now, I had an aunt that had the reverse mortgage, and the kids didn't pick up the mortgage because you got somebody got to qualify for a new mortgage to pay the old mortgage off, and this it's almost like you buying a house from your dead parent or something.
Okay. Yep.
And then on top of that, they still got to pay you still got to pay your insurance and your property taxes. So if you on a fixed budget, if your property taxes are high, you get that upfront money. But once that money run out, where are you going to go to? You know what I'm saying?
Yeah.
And so it's a gamble almost.
It is. It definitely is. And so it's so much. Also, and I'll say this, before we run out of time. I have a book. It's not my book, but it was a book that was written called How Money Works.
You're not the author of the book?
No, I'm not the author. But, again, I'll put my contact information up. And if you send me your email address, I'll forward you a copy of this book. Also, if you're married, specify if you're married or not. And I'll forward you some information on marriage and money, a booklet on marriage and money. So,
yeah. Keisha's your daughter?
Yes, Keisha is my daughter.
Shout out to Keisha.
Keisha said, being that so many people are struggling with being unemployed, what happens if the policy lapses due to non-payment?
Well, one good thing about Primerica right now, they understand the climate that we're in. And if you call the company and let them know what your situation is, they will work with you for a period of time. And if your policy does lapse, then, once you're able to get it reinstated, there's no upfront money to get it reinstated. It's just a matter of saying I'm ready now. I'm in a position to start making my monthly payments again.
Okay.
And you will be able to do that. But the company realized what's happening, and you call the home office and they will work with you.
That's that sounds great. Now, Primerica is huge. They're still Armor City Group, right?
No. We're independent.
Independent now.
But are you saying they're lying? Or?
No, I'm not saying they're lying.
Oh. I mean, that sounds good, but
I would never say that about Kurt. He one of the honest people I know. But let's say somebody policy lapses now, you got a claim.
Mm-hmm.
So is it just a judgment call?
Story. That's a different story. If it's lapsed, that now here's the thing, and I last year I actually paid a death claim, a $50,000 claim on a policy that had been lapsed for 11 months.
Oh, wow.
Really?
And what the company did, they just told the family they had to pay the back premiums, which was about $2,000. But when you tell a family, you send us $2 and we're going to send you $48,000. You can't beat that.
No, absolutely not.
And so that was a personal client of mine. So
yeah, that's amazing.
Yeah.
Let me ask a question. So,
and Keisha said you're doing a great job, Daddy.
Thank you, sweetheart.
What other lifestyle factors can impact your life insurance policy before and after the plan goes in effect? Like, for example,
motorcycle ride.
Yeah, if you're like somebody who rides bikes, or even if you're one of those people who like to do like adventure sports, like skydiving or rock climbing, things like that.
It can have an impact in depending on how often you do it.
Okay.
If you ride motorcycles every day, then your premiums may be a little bit higher than just.
But you got to disclose it up front.
Yeah, you will have to disclose that up front.
Yeah.
Okay.
So.
All right.
So you can't be trying to get a low premium and say you don't have a motorcycle, then you get you die in a motorcycle accident and they found out you had a motorcycle for the last 10 years.
And or if you have excessive speeding tickets, stuff like that, could have affect your monthly premiums. But other than that, not a whole lot.
All right. So I have another question, because I've always seen it like on TV and things like that, but I don't know if it's true or not. Let's say, for example, I have a premium, but I commit suicide. Okay,
that's a great question. And this is really probably universal throughout the industry.
Okay.
As long as you have a policy for 2 years, it's called a contestability period. And once you've had your policy for 2 years, it really don't matter how you die.
Really?
It don't matter how you die.
Okay. I've never heard that before. I've always heard like, oh yes, because you committed.
Yeah, and again, with our company now, I don't know about with our company after that 2-year anniversary, because we've had, information where people have called in to see what their contestability period, how much more time they had. And so the people on the other line, they're trained to pick up on those things. Like, why are you asking that question?
Mm-hmm.
So we've actually prevented people from committing suicide, because they call in to see if their policies have been on the books long enough.
Yeah.
So we can call the appropriate people to get them some help. But as long as it's been on the books for 2 years, it doesn't matter how you die.
Wow.
Actually, with all the COVID deaths going around, how is that affecting the payout process? Because if somebody get a policy with you, let's say January of last year before COVID, and they died from COVID, or they got a policy with you after March, was there some change in you guys' rules of, you can't write policies during COVID, and if they die from COVID?
The only change we made, if you tested positive for COVID, you have to wait 90 days after you test negative.
Okay.
Right.
Other than that, there's no, we've paid multiple hundreds of millions of dollars in death claims due to COVID.
Okay.
But long as to get a new policy, if you've tested positive, it has to be 90 days after you've tested negative.
And that's because COVID can actually stay in your system
exactly
for 90 days.
Yeah. So other than that, there's no restrictions, with us. Insurance have so many unwritten things that are in policies. Give you an example. When 9/11 happened, there were only 3 companies that paid death claims in that tragic, simply because when a terror attack happens, it's declared an act of war.
Mm-hmm.
A lot of policies have stipulations in there. If you die because of an act of war, that policy is voided.
Really?
And we're only 3 companies that paid policies.
And I'm pretty sure Primerica was one of them.
We led the way. We led the way.
Shout out to Primerica.
And so I tell people that because we're living in these uncertain times. And if you're sitting in a restaurant and some fool decides to come in there and blow himself up and blow everybody up and was with one of these extreme groups, it was an act of terror, which is now an act of war.
Mm.
And so a lot of companies won't have to pay those death claims, unfortunately.
Now, that's a good segue, because I do have a question about that. Under what other circumstances could insurance policies be canceled?
If you die in the act of committing a felony,
okay,
you know, a company doesn't have. I know that's our rule. You don't have to pay. But other than that, there really aren't any. You know, as long as everything is correct and there wasn't fraud,
right?
You know, they're going to pay. We pay more death claims, and this is just not to. And all this stuff I say is, you know, you can go and research it. So, and one thing about the insurance and investment industry, you're very compliant. It's a highly regulated industry. There's no way I can get on here and say stuff that is not true, because I can lose my license doing that.
Right. Right.
But fortunately, our company pays more death claims than any life insurance companies on the planet. You know, we pay over $1 billion a year,
man,
in death claims.
That's big. And the question: what is your opinion on the Gerber grow-up plane?
I could just say this: you can do better.
Okay,
you can do a whole lot better. I know it sounds good, and they play with your emotions.
Well, they got the baby on
the baby, and I want to do this for my. I want to do this for my grandchild, my child. You can do so much better, you know, by just getting a regular college plan,
with the 529,
a 529 plan, something like that. You'll do 100 times better than what that would do for a child. They play with the parents' emotions with that.
Okay,
but you can do a whole lot better than a Gerber policy.
And then is a 2-year waiting period for all policies, or
all policy? Every company. It's not a waiting period.
That's just a standard.
It's not a waiting period. You can get a policy today and die tomorrow, and it's going to pay. You know, so it's not a waiting period.
Mm. Well, the suicide is
just the suicide part.
But now those other policies that you see on TV, the way they target,
now the ones you see for the seniors on TV, in the fine print, if you die within the first 2 years, it's not going to pay the death claim.
Yeah.
Okay. You know, but not with us. We've had policies written today, and a person died before the policy was even issued, and it's still paid out.
Really?
You know, so as long as, you know, if I took a policy out on you tonight and what you told me was factual, and something happened before I even made it back to my office to process it, but because I took that policy from you, it's a binding contract.
It's in hand, and
it's in hand. It's still going to be processed.
Right. Okay.
So, and we've had many people have testimonies of that they took out a policy this day and they were getting a phone call tomorrow.
Kurt, let me ask you. So, and you may have said it and it may have went over my head, but I wanted to ask again. In terms of insurance plans, right? Do they have a cash value if you decide to cancel the policy? Is that something that is possible to do?
If you have a whole life or a universal life policy, you have a buildup of cash in those policies. But here's what, again, when you look at those policies, there are so many restrictions in there. Like most whole life policies, for the first 2 years, your balance is zero. You're paying it every month, but the balance is still zero. And I always ask the client a question: if you went to the bank and you're checking a savings account and you were making a deposit every month, in 2 years, you went to see what your balance was and they told you zero. I said, you'll probably be ready to catch a case.
Yeah.
But that's what a whole life policy does. You don't build up cash value to after the second year, even though you're making these payments.
Yeah, that's crazy.
You know, about 2 or 3 years ago, I read this article. This white guy in Chicago, you know, because Chicago has all this violent crime every day, the killing, the murder numbers are off the chart.
Yeah.
What this white guy was doing, he was just going into the neighborhood, the black neighborhoods, and getting the parents to get their kid to sign for these life insurance policies. And he was putting in 2 or 3 claims a year, and that's how he was eating. But, you know, he was paying for the funeral and giving the mother a couple of dollars. And you know what happened to that? Once he made good on one, promised that he paid for the funeral, give the mother a couple of dollars, she's going to tell her friend and tell their friend. Right. And so everybody's going to come to this guy, and this guy probably eating $300,000-$400,000 a year off of pennies that he's paying for these 19, 20-year-old kids.
It's sad, but, you know, I did hear about that too. You know, it's a lot of fraud that goes on in the insurance industry, unfortunately, but you just have to be careful. You know, if it doesn't look right, smell right, just research it, you know, ask somebody, you know, because it sounds good, but 9 times out of 10, and you don't realize it until it's too late.
But what was he doing wrong? Because he was getting the permission from the parents. Or he just didn't have any insurable interest. He
didn't have an insurable interest. And you have to have, I can't go and put life insurance on you. I don't have an insurable interest in you. Now, if we were business partners, that changes. Okay. But just because we boys, I can't put life insurance on you.
Is that so? Is that illegal or is it just unethical?
It's unethical and it's an insurance law.
Okay.
You know, now do people break it? Every day. But you just can't put, you know, I mean, you can have insurance on people. You know, you have to know that a person has life insurance on you.
Yeah.
I can't just because I got your social security number, I got a policy that you don't even know about. That's unlawful, unethical.
That's nasty work right there. It really is. But people do it all the time, huh?
Every day.
Wow.
Insurance is a big business, you know?
It sure does seem that way. Hey, let me ask you a question. So kind of shifting gears a little bit. Let's say I wanted to get into the business because that is another part of what you do. You know, you recruit and, you know, you build it. So what are the steps in terms of getting into the business?
Really just saying you want to do it. You know, we'll schedule a Zoom presentation with you to show you exactly what we do because it's more than just life insurance. You know, the good thing about Primerica, they're going to pay for your license through the state. They're going to pay for your class that you have to take online or in person. They're going to pay for your investment license if you choose to get one. So it's just a matter of you saying you want to do it. And I couldn't think of a better way for anyone to make an extra couple $1,000s a month part-time sitting at home.
Right.
You know, and then marketing a product that everyone needs. You know, I tell new people all the time, when you get your life insurance license, just put it on your social media. Just got my life insurance license. I said, I promise you, somebody's going to hit you up.
Yeah.
Because people do business with people they know, trust, and so forth. And so it's a lucrative business opportunity, especially for women. I don't know why, but the women are blowing this thing up in a big, big way. So again, I will leave my contact information, and you know, if people want to hit me up and get more information, I'll be more than happy to sit down with you or a Zoom call or either a phone call.
To pique people's interest, the average person don't understand how much money an insurance agent make off of a policy. You know, because
it's a lot.
Yeah, they see that, you know, somebody may pay $50 or $100 a month, but you know, they don't know that you may make 100% of that premium for the year in your capacity. You know,
yeah, you can actually.
Now, what's your percentage because you had this high ranking?
I mean, you know, I can easily be sitting down with the family and over Zoom and put a plan in place, and it just paid me $1,500 in that 30-minute time frame.
Kurt, I just want you to be aware DP has an innate ability to be trying to tell people business on air. So I just want you to let me just warn you. I should have warned you before you start asking us questions.
When you see the presentation, that's what they're gonna tell you. They're gonna tell you how much money.
One thing about Primerica, we definitely aren't afraid to disclose, incomes,
right?
Simply because there are a lot there that tell people you can make a lot of money, but they don't never talk about the money.
Is that because a lot of people think like insurance salesmen are like snake oil salesmen, or they really don't trust them?
They used to say insurance salesmen were at the bottom of the totem pole.
Yeah.
I don't look at myself as an insurance agent. I have an insurance license, but when I sit down with a client, I've done way more than what an insurance agent would ever do to them.
Right.
I'm going to educate them on not just insurance, on investing, getting out of debt, the whole 9 yards. Our plan, the company's mission statement, is to help families become debt-free, financially independent, and properly protected. That's not what an insurance agent is there to do.
No,
they're there to sell some life insurance.
Right.
I want you to have $1 million saved in your investments in 20 years. But in the event that you don't make it 20 years, I still want your family to have $1 million.
Yeah. So the coming into the business, if you don't have money to pay for afford the life insurance policy, but if you know a lot of people, you know what I'm saying, coming into the business can afford you that extra income to pay for this life insurance policy to get your investment going in the right direction for your beginning your financial freedom path. You know what I'm saying? Because it's amazing that even coming into the business, you have this nice commission plan that you can make several $100s on one sale easily.
Yeah. And we tell people, if you can save $1 a day, our mutual funds start at $50 a month. But how many people aren't investing? Right. How many people look at the news every day and see the Dow closed at such and such and don't have a clue of what they're talking about?
Right.
Because if you're not a part of that, that's the wealth. That's the heartbeat of the country or the world.
Yeah.
And so we weren't educated, like you said, as kids and so forth about that. But, I always tell people, you got to pay yourself first. It's never too early to start saving and investing. It's never too late.
That's real.
And when I say saving and investing, you got to do both.
Yeah.
You save for emergencies, vacations, trips and stuff like that, but you got to invest for wealth. You got to invest for retirement, college education, and so forth.
Right.
You got to be getting a double-digit return on your wherever you have your money at in order for it to beat inflation, taxes, and so forth.
That's nice.
Now, what do you say? Because I really believe in the Primerica business model and the opportunity. What do you say to people that say, "Hey, I'm not a salesperson"?
You don't have to be. I'm the quietest person by nature you would ever meet. I'm a very introvert person, but it's just having a conversation. That's all it is, having a conversation. And I took it from an educational standpoint, because I love educating anyone on how money actually works. Everything, like I said, once I email you this book, everything you know to become need to know to become financially independent is in this little book right here. Everything you need to know.
It's all the information they just got to hook their caboose to somebody or some company.
Right. It don't necessarily have to be me. This here will educate you on everything you need. There are people that spend hundreds and tens of thousands of dollars to get someone to tell them this info right here.
And for those who can't see what it says, it basically says a common sense guide to financial success. That's it.
Common sense guide.
Can you leave me one of those?
I'll leave this one to you, and I email it, to every individual that hit me up with their email.
I'm gonna take that. You can get that. So listen, what are some other, what are there things that people should not do? Like, one of the things that you said was that outside of insurance, you also talk about investing, getting out of debt. What are some of the things that they should be doing, like on the investment side, just to get started?
Well, first of all, paying themselves first. You can never make too little money where you don't have money to save.
Okay.
Because pay yourself first. And then you have to make sure you're just doing the right things. I mean, I'm teaching my kids this now, not to make the same mistakes I made.
Right.
You know, and we have to teach this younger generation that, you know, don't work all week long and then don't have nothing to show for where your money is. That's one of the worst feelings in the world. Just sit back and say, wow, man, I had $1,000 in my account. It's down to zero. What did I do?
What did I do? Right.
You know,
what did I
at
do?
least be able to say, well, at least 200 went into my IRA, into my investment and so forth.
Right.
And you save money and invest money today, one day that money is going to save you, you know, without a doubt. And we have to take advantage of the marketplace. I mean, you know, we had funds that did high double digits last year, and even during a pandemic.
Now, explain the difference, because a lot of people may not know. You guys deal with mutual funds and IRAs.
And annuities,
and annuities. Explain the difference between that and day trading. I'm gonna just buy some Apple stock today.
Okay, and that's a good question, because you know, I know a lot of people that do trading. When you're buying stocks, you're buying a stock from one company. Okay, a mutual fund consists of, you may have IBM, Apple, Walmart, all these companies in one fund. And the reason a mutual fund is very diversified, because everybody's not going to be doing bad at the same time.
Right.
You know, whereas I can buy a company from stock from company X, and they may go straight to the toilet. But if I had X, Y, Z, A, B, C, everybody didn't go in the toilet at the same time. So it's very diversified. So that's what a mutual fund allows you to do. And so, and you have a professional manager, money manager, managing that fund. So you don't have to have any kind of clue on how to invest, or because you got people that are doing that for you. They don't make money unless they make you money.
Right. Okay. Right.
You know, that's what a mutual fund does.
Yeah.
And like I said, for $50 a month, everyone could be looking to see what the Dow did today.
We can do the Dow or the S&P 500 do good, and you did good.
Yeah,
you know what I'm saying? It reflects on your balance sheet at the end of the day.
Exactly.
Because when it's red and there's blood in the streets, it's a hit. It's a little different.
So, you know, if somebody wanted to get involved in opportunity, what's the cost right now? I know what it was.
It's $99. You know, and all that is your background check, your fingerprints, and so forth. And if you went into the financial services industry on your own, you're going to spend $1,000 to get the licenses for 99. And really, it's not even that, because they're going to give it right back to you. All you got to do is log on to the Primerica app.
Right.
They're going to give you $50 just for doing that.
Just logging on to that.
Nice.
You know, so it's definitely well worth. And I tell people this all the time. I would come and get the license, because if you put on your resume, I got a life insurance license, investment license, it's a game changer. Really? You know, because everyone can't get the license, and you didn't have to pay for the license. You know, and it's not a Primerica license; it's the state of Georgia. It's the SEC. You know, so it's a very lucrative opportunity. So,
and you being very modest, you know what I'm saying? Because I remember being over there to the meetings, and it's almost like a pep rally. You know what I'm saying? It's high energy, it's exciting, and you got all these folks. I remember when Carl Blackman, he moved from Arizona to Atlanta because he was a part of Sam bought his business. You know what I'm saying? So Sam is the one he was talking about makes $3 million a year. You know what I'm saying? Hey, a black dude make $3 million a year, bought Carl business, and Carl was in Arizona, and Carl moved here. You know, so, and Carl had this huge business. You know what I'm saying? So it's like Curtis business is a part of Sam. So when Curtis makes hundreds of thousands a year, Sam gets a portion of that. You know what I'm saying? So it's really an amazing concept.
It is. It's a very amazing concept. And, you know, Primerica has done really well. The pandemic year was an all-time record year, you know, and when you look at a face-to-face business that we're in, and we're 1 year into it right now, and for the company to have a record-shattering year, during the pandemic, because once we went to that Zoom platform, it was a game changer. We'll never go back to doing it the way we did pre-pandemic, because I could be in 4 or 5 different states and I'm just sitting in my living room.
You just talking,
you know, and so I can be way in California, way in Florida, Alabama, whatever, and I haven't even left the house because of this Zoom platform. And so the company is doing great. You know, we are independent now, public traded company. You know, so we're doing real well. Stock is doing real well.
So Primerica's on the stock market?
Yeah, we're on the Dow Jones. We are a Fortune 1000 company.
Really?
You know, Fortune magazine named us the Fortune 1000 company. Forbes named us one of the top 50 companies in all of North America in terms of customer service and so forth. So 50 most trustworthy companies.
Good deal.
So
Good
you
deal.
may hear a lot of insurance agents talk negative about us, but Wall Street and the insurance industry,
the money guys, the people who matter.
We have an A+ rating, you know, which means we will pay our death claims. You can't get better than A+. So, you know,
that's a good deal.
Yeah.
How can the people find you?
Okay. First of all, you can email me at curtiscampbell62@yahoo.com, curtiscampbell62@yahoo.com, or ccampbell@primerica.com, ccampbell@primerica.com, or you can call me. 770-990-4909, 770-990-4909. And of course, I'm on Instagram, Curtis Campbell 20, Facebook, Curtis Campbell. So
that's what's up.
TikTok, you on TikTok?
TikTok. I don't know what my hashtag is, but I am on
He's
TikTok.
on there though. He follows me.
But the best way, you can text me your email address, and I'll be more than happy to get that material out to you. Or if you want to text me or call me to set up a Zoom appointment, I would be more than happy. The easiest way, of course, 770-990-4909. That's with me all the time.
Let me ask you this, Kurt. So say when somebody's in South Carolina or New York or you know, Alabama, and they want to be a part of the business or buy insurance, can they
call me?
Say the number again.
770-990-4909. It doesn't matter what state you're in. We're in all 50 states. The company is anyway, so I can transact business in any state.
Nice. Good deal.
Whatsoever. I can recruit people that want to do the business from any state. It does not matter, you know, because we do all our training. Everything is done on Zoom now. So
that's what's
like I said, it was a game changer.
What does a person need if this? I got $99. I'll give this thing a try. What do they need besides $99 to make it work?
Just a work ethic, a big vision, in which we work with you to get that, and to know that, you know, wherever you're trying to go, you can get there. You know, everybody's looking for an opportunity, and it's been said we get 2 to 3 real opportunities in our lifetime that can make a real impact. And you have to ask yourself, is this one of them? It was one of them for me.
Yeah.
You know, I grew up thinking I was going to play in the NBA, but that didn't happen. So this is one of the opportunities that I feel like, you know, it's been a blessing for me.
Yeah.
You know, I believe this is what I was ordained to do, you know, because I have a passion for it. And many lives have been changed because I made this decision.
Right.
To do this. And so, you know, all you have to do is have a want to. You know, if you just tired of being sick and tired, you know, you tired of being average and ordinary, then you have to do something.
And now the Zoom has changed the game. Because I can remember when I was doing it with you, we had to actually go sit at the kitchen table.
Drive way across town, and
then may not be there when you get there. You know, so now the Zoom is, you got a shirt and tie on. You don't have to. You can have your pajamas pants on, you know?
Which I do a lot of times.
Good deal, man. Well, look.
We appreciate you.
Thank you, man. Thank you.
Hey, man, I appreciate y'all having me here.
Yeah, great information.
And I look forward to the audience contacting me, reaching out to me. And, you know, we can take this to a whole nother level. So anytime you want me to come back, just
absolutely. Absolutely.
you know, and I'm telling you, if you want to do something and you got some time or you just want to do something different, you know what I'm saying? Reach out to Curtis, you know what I'm saying? Because he's making money. Now, he's been making money for 20 plus years now. when I met him, he was already in the 100,000 plus bracket. I'm saying that's what Primerica promotes. They want you to know how much money these folks are making because they want you to be a part of that success.
Right.
If they like your regular job, you don't know what your boss are actually making because they want to make sure you're making less than they are. You know what I'm saying? Primerica wants you to come in and blow it out the water.
Yeah, it's a matter to say, look, this is what I'm getting. You can get it too.
And they're gonna give you the blueprint. You know what I'm saying? This is the blueprint. Right. All you gotta do is have to work ethic, you know.
Shout out to Darlene Dean, who went ahead and put the number on there.
My cousin.
That's what's up. That's what's up.
770 990. What's the number?
It's 770.
770. Yep.
770
770 990
4909.
4909.
Okay.
Cool. All right. Well, look, this is Real Talk with DP and Dev. Again, thank you all for joining. Subscribe to our channels. We are on Facebook, Real Talk with DP and Dev. We are on YouTube, Real Talk with DP and Dev. We are also on Instagram, Real Talk with DP and Dev. Please subscribe. We have a bunch of content that we're going to be giving to you, and we're going to be here for as long as y'all continue to watch. So we thank y'all.
Every Tuesday.
Every Tuesday, 7 p.m. Same time, same channel. We rocking out.
Yeah. So let's give a shout out to everybody who watched. Miles Campbell, that's your son, right?
That's my son.
That's your son.
Shout out
Clay Sharp.
That's my brother.
Darlene Dean. Your daughter. You know. Madu. Trav.
And that's just on Facebook and YouTube. Shout out to those who are on TikTok watching us as well. We appreciate you.
Yeah. So until next time, every Tuesday.
7
o'clock.
And before I end it, like I always do, and all that you do it with positivity, creativity, and authenticity. This is Real Talk with DP and Dev. Peace, beautiful people, and good night.
Peace.